Do you know what the best financial tool humans have ever invented? Passive incomes, the ability to let your money work for you, and one of the best places to do that is the stock market. While there are a lot of the goals, good retail investors, there is the good numbers of the beginners who try to predict future stocks price by looking at charts. In If this is how the chart was moving, then this is what it should happen. If it has been growing for the past few months, then it should keep growing for the next 3 months. Whatever the argument is, we have to understand that the stock market are not lottery tickets to gamble with. Behind every single stocks, there is the company that manufactures something, builds something, and provides the certain services. So you don't have to look at the stocks only, but rather look at what's the businesses behind the stocks and how well it's performing. I know that sometimes it might get a bit difficult because there could be so much news around some stocks that you don't even care about the business as long as the stock's price seems like it's growing. That's why here in this video I want to share with you how to take your investing skills to another level. I am not going to talk about the basics of the investing because we have covered that in the previous videos. I will assume that you already know what the stocks market is, you have traded some stocks, and now you are looking to improve your investing skills. You want to be a little more professional. So here are the 5 things that I would understand and follow. You are going to become the far better investors. If you are ready to give this video the thumbs ups, and by the way, we have the new channel called Tuesday Thoughts, where we are sharing short clips from the main channel. So if you miss something important from the main channel, you might come across in on the second channel. So if you guys loved us and support us, please subscribe to the channel. The link is in the descriptions. And now let's get back to the video. Understand how the market moves. Things the market is impossible, and whoever tries to fail miserably. That's why long-term investors have always emerald victories and made most of the money. However, the market doesn't just move up and down randomly. The stock market dates back to the beginning of the 17th century, when in 1611 the Dutch East India Company decided to sell its stocks in the public, and since then the market has developed enormously. So the market follows certain patterns and rules. If this is what the government does, that's how the market reacts. So if you understand these patterns, you might be able to predict the market to a certain extent. When the economy slows, customers buy less, which means corporate profits falls and stock prices decline. That's when investors prefer the regular interest payments guaranteed by bonds. That's why bonds yields rise. Understanding the relationships between bonds and the stock market will help you to understand the directions that the market is handled to. But that's just one of the many factors that influence the market. Factors that influence the market. Take, for example, financial policy. When the government regulates the spendings and tax politics to include the economy, especially macroeconomic conditions such as aggregate demand, employment, inflation, and economic growth, which will end up influencing the stocks market overall. Lowering taxes will make corporations more profitable, for example, since now they can keep a bigger chunk of their profits. Therefore, their stocks price will rise. However, the government doesn't randomly raise or lower taxes, but instead follows policies to keep the economy stable. There is also monetary policy, where the Fed controls the supply of money in the market by either adjusting interest rates or printing money. And each of these policies influence the market in different ways. So if you wanted to become the slightly more professional investors, understand those concepts. Find out what exact they influence the market. You won't be looking at stocks as some numbers of the screens of your smartphone, but you will have a broader idea of how the market is actually performing, and not what random YouTubers say. On your on YouTube, like myself, that's why we'll always tell you that this is not financial advice and everything that's said in this video for educational purpose. Second, learn how to read financial statements. I am really grateful that apps like Robinhood or Webull all the democratized investing. Anyone can now invest in almost any company from the comfort of his couch, as long as you have the smartphone, even if it is a 100% $100 smartphone. No offense, but most of these real investors don't look at the stocks as the company, but as the name that triggers the news, which makes their financial decisions quite arrogant. Remember, the purpose of any company is to make money. That's the most important thing that matters. So if you would want to know if the certain company is good investing or not, you have to read these financial statements. If you are investing in the certain company without analyzing its financial statements, you're gambling. I know that it might get criticized for saying this, but that's the truth. A certain company might hit the headlines for developing the technology that will make us immortal, for example, but after looking at their financial statements, you may find that this company has a lot of debts. It doesn't have enough cash to survive till the end of the year, and its source of cash flow are dying. The stock's price might seem promising looking just at the chart, but looking beyond that chart, you start seeing the real value of that company. However, looking at the financial statements isn't enough. If you want to take your investments skills to another level, third, learn how to fundament analysis. When you go through financial statements, you will realize that they have current assets, non-current assets, liabilities, long-term debts, short-term debts, equity. The company might not have any debts, which might look the good signs, but it's not. If the company is not borrowing enough against its equity, then it might not be taking the best advantage out of the resources. Something might be wrong with this company. So we have metrics such as the debt to equity ratio, where you divide the company tools liabilities by its equity. The ratio is used to evaluate the company's financial leverage. It is a measure of the degree to which the company is financial its operations through debt versus who owns funds. It illustrates the business ability to cover all outstanding debts in the event of the business downtrend. Or we have something called the price to earning ratio that we have personally explored on the channel. That measure to the current stock price relative is APS or earnings per share. Once you master how to do your fundamental analysis, you will have a much deeper understanding of the company you are looking to invest in, and you will understand how well it's performing compared to its competitors. Define your strategy. If your strategy is to just get into the stock markets by whatever it's trending on the news, you expect to become the millionaire, then you can only rely on luck. The good luck, and if you get lucky, you could be making millions of dollars, but luck is not a strategy. That's why you don't invest randomly. Before you start throwing money into the market, understand what your strategy is. Are you trying to profit from the rise of high volatility stocks, or maybe you are more into the passive incomes and beating the high dividend stocks? Or maybe you are more conservative and emotional, so you move into the mutual funds. Or maybe you don't want to wait that long to enjoy the fruits of your investments, so you get into the day trading. It don't matter what your strategy is as long as you have one. Fifth, master a few industries. What distinguishes great investing from the arrogant is how much the investor knows about the company he is investing in. As we have mentioned before, that behind every stocks there is the company, and behind every company there is products or services, and the success of the stocks is going to be based on the success of the particular products or service. The people who early on invested in Amazon or Netflix, for example, had the deeper understanding of the internet. Those people understood the internet so well that they could clearly see how 20 years later everyone is going to buy his next gadget on the internet in the world to replace his cable subscriptions with online streaming such as Netflix. So to find a great opportunity in the market, you have to become the expert in the few industries. It doesn't matter what it is: energy, tech, financial services, whatever. Remember, to make a lot of money, you don't have to be right every single time. You have to right just once. $10,000 or $20,000 investments into Amazon back in 2000s would make you a multimillionaire. The same applies to almost everything else, including the cryptos. So if you want to start making the great investments because an expert in the few fields, by the way, I don't forget to subscribe to our second channel, Tuesday Thoughts. Just click in the link in the descriptions and hit the subscribe button. That's all I'm asking. Is that too much? Anyway, thanks for watching. This channel is possible because you're the best audience in the world, and we will always try our best to make the most interesting and useful videos possible. Thanks for watching, and until next time.